Hello there. Thank you for joining us on Business Week. Here's what's coming up in the moment. President Bola Tinubu has announced that his administration will soon send an executive bill to the National Assembly to incorporate a new national minimum wage into Nigeria's legislation for the ensuing 5 years. Plus, Nigeria's total merchandise trade hit 31 billion naira in the first quarter of 2024. It's according to data from the National Bureau of Statistics. And outside Nigeria, the global economy is expected to stabilize at 2.6% in 2024. This is according to the World Bank in its latest Global Economic Prospect Report. Of this and many more are what to expect on the show today. I am Frank Omalap, and this is Business Week. Thank you, everyone, for joining us. Let's bring you some stories that made headlines in the week. President Bola Tinubu has said his administration will soon send an executive bill to the National Assembly to enshrine an agreed new national minimum wage, incorporating it into Nigeria's legislation for the ensuing 5 years. The president said he's in a nationwide live broadcast on the 25th anniversary of Nigeria's democracy. He assured Nigerians that the approach deployed to dialogue with organized labor will continue to animate his policies and interaction with the key constituents of Nigeria's political economy.
As we continue to reform the economy, I shall always listen to the people and will never turn my back on you. In this spirit, we have negotiated in good faith and with open arms with organized labor on a new national minimum wage. We shall soon send our executive bill to the National Assembly to enshrine what has been agreed upon as part of our law for the next 5 years or less. In the face of labor's call for national strike, we did not seek to oppress or crack down on the workers as a dictatorial government of the past would have done. We chose the path of cooperation over conflict.
And our new data from the National Bureau of Statistics in its foreign trade goods statistics for first quarter of 2024 report shows Nigeria's total merchandise trade hit 31 billion naira in the first quarter of 2024. The surge represents an increase of 46.27% over the value recorded in the preceding quarter and rose by 145.58% compared to the value recorded in the corresponding period of 2023. The report also revealed that exports accounted for 60.25% of global trade in the reviewed quarter, with a value of 19.16 billion naira, showing an increase of 51% compared to the value recorded in fourth quarter 2023, and by 195.47% over the value recorded in the fourth quarter of 2023. Export trade was dominated by crude oil value, valued at 15.46 billion, representing 80.8% of the total export, while the value of non-crude oil exports stood at 3.6 billion naira, accounting for 19.2% of total export, and non-oil products contributed 1.77 billion naira. That's about 9.28% of total export. The latest report from the Organization of Petroleum Exporting Countries shows that Nigeria's average crude oil production in May falls to 1.25 million barrels per day in the month of May. This represents a decline of 30,000 barrels per day when compared to the 1.28 million barrels per day recorded in the month of April. OPEC made this known in its monthly oil market report, which put total crude oil supply by OPEC Plus members at 40.9 million barrels per day. The average crude oil production of 1.25 million barrels per day for the month under review represents the second lowest crude oil production in 2024, only exceeding the crude oil production in March, which stood at 1.23 million. Despite the low crude oil production, Nigeria remained the highest crude oil producer in Africa, followed by Angola, Libya. However, the oil cartel said secondary sources reported that Nigeria's crude oil production increased by 5% to 1.41 million barrels per day from 1.35 million barrels per day recorded in April. Both figures fell below Nigeria's 2024 OPEC production quota of 1.5 million barrels per day. Elsewhere in the week, the Nigerian Upstream Petroleum Regulatory Commission says it will continue to key into President Bola Tinubu's executive order aimed at improving the efficiency, attractiveness, enabling business environment for a stable and efficient regulatory environment for investors in the nation's oil and gas industry to thrive. The chief executive of the commission, Engineer Gbenga Komolafe, said this at the commencement of the 2024 pre-bid conference for licensing round in Lagos. Sunday Binibo was at the event and filing this report.
This pre-bid conference marks a significant step in the 2024 licensing round aimed at providing stakeholders in Nigeria's upstream oil and gas sector with a comprehensive understanding of the licensing round processes and requirements. It also offers a valuable opportunity to explore and unlock Nigeria's vast hydrocarbon potential and attract international and local investment to drive the nation's economic development.
Our regulators' willingness to ensure that things are done.
The NUPRC chief executive, in his remarks, emphasized the Commission's commitment to advancing Nigeria's oil and gas industry while highlighting incentives aimed at attracting more investors into the sector.
The exercise is a significant leap in our strategic hydrocarbon development initiative. This round introduces a number of blocks from the fertile onshore basins to promising continental shelves and the untapped depths of our deep offshore territories. Each block has been chosen for its potential to bolster our national reserves and stimulate economic vitality.
He also said the bidding process will run for 9 months and will be fair and transparent while encouraging stakeholders to participate in the bidding, which, according to him, will mark a significant opportunity in the Nigerian oil and gas sector.
So part of what we are equally doing differently is we are very disciplined as a regulator with the approach for participation in this exercise. We've said that it's going to be very fair and transparent in line with best practices. So we have a schedule. That is the schedule there. We publish even the schedule, the map that will guide the exercise.
The portal has been made live. What is expected for every bidder is to go to the portal, register. You're going to register your company as an entity that's as a single applicant, or companies that came together to form a consortium is allowed. And again, companies not registered in Nigeria can start the process, but if qualified to be awarded, they have to register under the KAMA law to be given the license.
The objectives of a bidding exercise is to grow Nigeria's oil and gas reserves, boost production, enhance content development, and attract investment, among others.
Elsewhere in the week, the Minister of Marine and Blue Economy, Mr. Adegboyega Oyetola, has affirmed his dedication to establishing a robust national policy framework for the marine and blue economy by close of 2024. During a maritime conference in Lagos, the minister highlighted plans to enhance Nigeria's maritime sector to meet global standards. Minister Oyetola also noted achievements in revenue generation, attributing them to innovative strategies that address revenue leakages and tap into new opportunities within the marine and blue economy. He emphasized ongoing initiative to upgrade infrastructure, including the development of inland dry ports and modernization projects at key ports nationwide.
The marine and blue economy is estimated to contribute significantly to the country's GDP and increase the revenue of the country and potentially creating millions of jobs directly and indirectly. As the pioneer minister of the ministry, it is my primary responsibility to lay a solid foundation for the sector so as to position Nigeria as a premier maritime nation. The objective of optimizing the potential of the marine and blue economy to diversify revenue, deliver sustainable development, and cultivate environmental stewardship can only be achieved by enabling an inclusive maritime and blue economy driven by an operating environment that meets global best standards.
Outside Nigeria, the World Bank, in its latest Global Economic Prospect report, says global economy is expected to stabilize for the first time in 3 years in 2024. The The report is contained in a statement issued by the bank's online media briefing center. According to the report, global growth is projected to hold steady at 2.6% in 2024 before edging up to an average of 2.7% in 2025 to 2026. The new data shows that the overall developing economies were projected to grow 4% on average over 2024 to 2025, slightly slower than in 2023. Also watching Business Week coming up after this break. Our focus is on investment opportunities in the Nigerian market amid economic challenges. Well, that's a talking point. In a moment, please stay with us. Thank you, everyone. Let's get into our conversation now. The Nigerian stock market has experienced a bit of volatility in the first weeks of June, coming from a bullish month of May. The first week of June concluded with a broadly bearish sentiment on the Nigerian exchange as the overall market witnessed declines. Now, despite this trend, the market has shown resilience, with the all-share index reaching an all-time high of 99,221.14 points, while the market capitalization settled at 56.12 trillion naira from 56.17 in early June. But what are the opportunities in the Nigerian equities market amid this volatility? So let's get talking right away. I'm joined by Chief Investment Advisor at Dealmaker Financial Advisors Limited, Mr. Christian Analysing. He joins me virtually now. Thank you, Mr. Analysing, for your time. Let's start this way. The Nigerian exchange was broadly bearish in the first week of June, but before then, the market ended the month of May with a surprise gain. We saw the all-share index raised past 99,000 points, hitting about 56.1 trillion naira in market capitalization. Well, despite the volatility in the market, we saw that the Nigerian stock market remains attractive. What do you suppose has shaped the market lately? I think we should start from there.
Over the years, for those who have been following the market, you will agree with me that Nigerian Stock Exchange, or the NGX, have been adjudged one of the best performing markets in the world globally. I think that was sometimes around 2020, 2019, 2020, or 2020, 2021, thereabout. So it is not strange that the market at some point, like you said, in May, ended on a bullish note. And even before then, between December last year and January, February this year, we saw a very bullish run in the market. Yes, Nigeria as a country remains an attractive destination for investors in an emerging market. If you check the return on investment in the Nigerian financial system, what you're looking at federal government instruments such as treasury bills, such as federal government bonds, okay, even when you're looking at some commercial papers that that have been floated by some companies such as Dangote Cement, such as the Nigerian breweries, you will see that comparatively, the return on investment from the Nigerian financial system is much higher than what you have in advanced economies. And the reason is because within the advanced economies, there is surplus funds. So with surplus funds, you expect the cost of capital to be low. But within the Nigerian space, there is scarcity of funds, there is paucity of funds. So you expect that the return on investment should be relatively high. So this is part of the reasons why you have seen the Nigerian capital market being an attractive destination for investors, even foreign investors, so to say. And again, if you look at what happened from June last year when Bola Ahmed Tinubu became the president of the country, some of the policy initiatives which are directed towards stimulating economic growth and revamping the financial system are in tandem with expectations, okay, of foreign investors and as well as domestic investors within our space. So it is this, an amalgam of some of these fundamentals that have led to the positive sentiment that we have seen in the Nigerian capital market.
There are concerns about the wave of delisting of some listed companies on the exchange. What do you suppose are the key factors driving this trend in the market? And how is this likely to impact investor confidence?
There are generally very many reasons why a company might take that position. You will agree with me that at the issue, a company gets listed, wants to be listed in the Nigerian Stock Exchange because it wants to access public funds, and which is equity funds, at generally at a low cost funds, such as equity funds, comes at a very low cost, because if the company does not make profit, okay, equity shareholders will not have any return on investment. That will be nothing like dividend. So it is an equity, is a very cheap source of funding for businesses. So it comes to pass that at some point in the life of an organization, there could be a strategic shift. So delisting is also part of long-term strategic shift, okay, of the shareholders of a business. It is possible that the shareholders of a business have actually gotten the money they need from the public, okay, and they want to exit the market at that point because they don't have, what will I say, or let me put it this way, they don't have funding requirements that necessitates their continued stay in the market. It could also be that they are exiting the market because they are unable to meet with the cost of being listed in the capital market, because being listed in the capital market goes with a number of expectations, okay, a number of compliance, okay, from the regulator, the Nigerian Exchange Group, and even the Securities and Exchange Commission. There are certain basic expectations in terms of filing of returns. And when you don't file your returns as and when due, it is very likely to attract a sanction that runs into millions. Another scenario, another reason why companies might want to get delisted, you also know that if you have a company, if you have your shares, okay, in the capital market, it is those shares are exposed, okay? It is possible for predators to acquire those shares. So if a company is trying to dodge or hide away from predators or predator companies acquisitions, they might decide to leave the market and become a private company. Sometimes too, it could be a strategy for rewarding minority shareholders or even the general shareholders, the majority shareholders. Why do I say that? Because if the share price of a company is very low in the market, it is not attractive, maybe because of illiquidity, systemic illiquidity. Where you have systemic illiquidity, it is reasonable to expect that share prices will not rise commensurate to the value of that company. So where shareholders feel that the share prices of their company are being grossly undervalued, exiting the market might be a way of compensating the shareholders. Because when that happens, assuming the company finds private equity investors, okay, with what we call dry powder, okay, dry powder meaning excess funds or funds available for investment in companies coming to buy them over. On the average, private equity investors usually buy existing companies at a premium of 20 to 40%. Okay, and their holding period is on average is between 5 to 6 years, or a finite period of about 10 to 12 years. So when private equity investors buys up a company, they manage that company, increase the value of that company, and again sell that company. So the issue of the listing from the Nigerian Stock Exchange is part of a strategy. Between the year 2021 and the year 2023, it is on record that about the market capitalization of the companies that left the Nigerian Stock Exchange was about 335 billion. So one would say that is that's a loss of money leaving the market. But at the same time, within the same space of time, we also saw that the number of the market capitalization of listed companies, newly listed companies in the Nigerian Stock Exchange, also came to 1.17 trillion. You saw the listing of Geregu, you saw the listing of MTN by introduction, you've seen the listing of Transcorp Power, you've seen the listing of Mercury, you've seen the listing of VAB Group, okay? So, but fundamentally, capitalization is not for checking the performance of the market. In actual fact, it is the all share price index that determines the performance of the market. And the listing of companies does not affect the value of the all share price index.
Well, I understand the impact of macroeconomic factors such as inflation. You have interest rate in that environment. So talk to us. What's your outlook for the market and expected outcome for the next MPC meeting, which is scheduled for July?
That the government has come up with this with a program, the ASAP, okay, the ASAP program. And what the ASAP is saying is that let us now reduce government income from taxation. It is a fiscal policy. It's a fiscal policy of the government, okay, which is trying to address the issue of tariffs, okay, on some imported goods, such as food items, such as chemicals, such as pharmaceuticals, okay, and all of that. So once that starts, you expect to see a situation whereby the CBN will no longer be adjusting rates at a geometric progression, so to say. So once the weight starts coming down, once you're seeing with the fiscal policy initiative, the monetary policy rate is expected to start coming down. And what does that mean? If it starts coming down, assuming the weights on treasury bills and bonds start coming down to about 17%, 16%, thereabout, you expect that investors will begin to reallocate resources, okay, via what we call portfolio rebalancing into the equity space. Because there, in the equity space, they are targeting a higher yield from dividend payment, and they're also targeting price appreciation in equity. So going forward, we expect that with this, with the marriage, okay, between the monetary policy now and the fiscal policy, okay, there's going to be an increase in activities in the Nigerian capital market. The direction of, or the focus of investment, okay, will begin to shift, okay, or navigate towards the equities market. And over time, that is supposed to create some rally, maybe possibly towards the end of the year, other things being equal. When you put together the fact that we're already in the, for example, for the banking stocks particularly, which have shown some fundamentals, and which also are at the verge of, you know, raising additional capital, which will also raise the value of the firm. There will become very, very attractive destination for investors for both investment from the pension funds and even foreign direct investment. So you see a situation where resources, funds flow will be going to those equities in expectation of bumper harvest from half year earnings, and of course going forward, third quarter results, and of course the final year, which is not too far from now.
Well, I think a good place to leave it. Thank you for your time, Chief Investment Advisor, Deal Maker Financial Advisors Limited, Mr. Christian Analysing. Thank you for coming on Business Week.
Thank you for having me, Frank.
All right, you've been watching Business Week coming to you from our studios here. But just before we wrap it up, let's tell you that the National Bureau of Statistics in advance first quarter 2024 report says the aggregate value added tax stood at 1.43 trillion naira in the first quarter of 2024. The report released in Abuja shows a growth rate of 19.21% on a quarter-on-quarter basis from 1.2 trillion naira recorded in the fourth quarter of 2023. On a quarter-on-quarter basis, the report shows that accommodation and food service activities recorded the highest growth rate of 59.15%, followed by the activities of the administrative support at 47.79%. In terms of sectoral contributions, the report showed that the top three largest shares in first quarter 2024 were manufacturing at 26.72%, information and communication at 17.42%, and mining and quarrying activities at 15.42%, respectively. Well, then that's our show this week. Many thanks for watching, and thank you everyone for sharing your weekend with us.
Is super funny. He is naturally witty. He is Funny Bone.